Good morning, everybody. Welcome to the stream. Welcome back. Hopefully, you all had a great end of the day yesterday. I know the market certainly had a great end of the day. It was not looking good before about midday yesterday, and then pretty much everything started to rebound towards that point. So, overall, the markets are looking decently today, although we'll have to see what happens as Fed Chair Powell speaks later today. We're definitely going to be talking about that. That happens at 10. So, let's start off taking a look at this somewhat interesting story. And good morning, Rocky Mountain Gobblers and Auto Codes. Welcome to the chat. And once again, I did want to say we'll probably be ending this stream around 10 again today, just to give my throat another day of recovery. You know, there's this. Unfortunately, it's just a little lingering of throat irritation. I don't know. I feel perfectly fine other than that, but unfortunately, my throat just isn't quite with it yet. But I'm sure that over the next couple of days, that'll completely dissipate. So what's up? What's up, JL? Good morning, man. Now, Wall Street looks higher after Monday's major tech stock rebound. So we're going to take a look at the charts in a second. But Goldman Sachs' David Kostin says a tech disconnect is the single greatest mispricing in U.S. stocks. So tech stocks rebounded yesterday, but Goldman Sachs apparently thinks that tech stocks are on the way down even further, right? They think that tech stocks have further to go to the downside. They have been falling a bit more than other types of stocks over the past couple of weeks, and we're going to take a look at that. So here's the S&P in the top left and the QQQ, which tracks mostly tech stocks, in the top right. So if you take a look at the yearly chart, I have a little drawing on it, and you can see if we zoom in a little bit that over the past couple of months, or past couple of weeks, I should say, the S&P, every time it's actually dipped to a higher place, right? We've been making higher lows in the S&P, and it's actually the exact opposite situation with tech stocks, right? The QQQ. We've been making lower lows with tech stocks every time we've dipped. So it seems like tech stocks really have been getting hurt, and it's possible that Goldman Sachs is correct, that we're probably, potentially going to see even more dips in tech stocks, because what we've seen over the past year, or even 2 years, if we pull out the past 2 years on these tech stocks, and actually check the percentage gains since let's check since the bottom of the pit of COVID, right? When everyone was the most fearful about COVID, let's see how much we've risen on the S&P. It looks like we're up on the S&P. Let's see. Let's pull this over here, and on the S&P we're up about 111% on the S&P since the pit of COVID, and on tech stocks on the QQQ. We are up, let's zoom that in, we're up since the pit of COVID about 129%. So a bit more, nothing crazy. It's not like it's 200% or anything like that, but it's a bit more in tech stocks. Tech stocks have definitely seen a little bit more love over the past year, and it's possible that they'll come back down a little bit to get a little bit closer to the rest of the market. Now, obviously with tech stocks, it's possible that they'll continue to rise a little bit more than everything else, because they do have better forms of leverage than most other stocks, right? With the S&P, stuff like Walmart is included in the S&P, and Walmart has to have these physical brick and mortar retail locations. They have to have a bunch of employees working at them, cleaning them, taking care of them. Security has to watch after them. They have to have people checking you out at the lines and whatnot. So there are some additional costs to running these S&P-like businesses, as opposed to these tech stocks where you could have a couple of coders make a program that you then sell to 1 million people, and it doesn't matter how many additional people you sell it to. It doesn't really cost you any more to keep churning out additional copies of that program, right? So there are some better forms of leverage potentially in some of these tech stocks in the QQQ that the S&P just does not benefit from, right? They don't have, obviously a lot of the tech stocks are in the S&P, but it does make sense to see that this index, the QQQ, does tend to rise a little bit more over time than the S&P. However, what fears are regarding right now are that there is going to be potentially a tapering at the Fed. Potentially monetary policy is not going to be as easy as it has been in the past, and people are worried that that could reflect poorly on tech stocks that have been benefiting from easy monetary policy for the past while. So we'll see. We'll see what happens with these tech stocks if they do end up falling. But good morning, everybody else. Good morning, Manny C. NJ, MWS, Hero Hero, Shadow Girl, Better Life, BB, Mark, and Greg. Good morning, everybody. So yeah, we'll see what happens with the tech stocks. Obviously, they have been seeing a little bit more pain lately. Once again, if we just zoom in on that chart, you'll see what I'm talking about. If someone is new to the stream, if someone just joined, then they can see what we're talking about. Tech stocks over here on the right, the QQQ, the S&P in the top left. The S&P has been making higher lows every time it's dipped, only slightly higher sometimes, but the QQQ has been making lower lows. So sometimes, once again, only slightly lower lows, but still lower lows nevertheless. So we'll see what happens if we keep seeing this volatility, potentially more spikes to the downside. We'll see what happens. It looks like we might have met the bottom on the QQQ for now, and on the SPY. We may end up rebounding over the next couple of days. Hopefully we will. We'll see what happens at this Fed meeting, right? Or at this at Powell's testimony. If he ends up saying something very bullish or very bearish for the markets. You know, a lot of people, Goldman Sachs included, are expecting that he'll say something relatively bearish, relatively hawkish. They think that he's going to potentially announce at this meeting, potentially announce at a future meeting that there will be 4 rate hikes in the future over the course of 2022, not 3, right? The Fed has said 3 rate hikes. They're expecting to take it from 0.75 to 1% interest rates, and what was it? Goldman Sachs is expecting that that they'll take it from 1 to 1.25% interest rates. So there we go. Hopefully we won't see too hawkish of a Fed. Hopefully Jerome won't be too hawkish today. But that's what we've got at the Fed. That's what's going on today. We've got Jerome Powell speaking, and tech stocks potentially taking a little bit of a dip because of it. But another interesting story that I saw, a relatively scary story actually, talks about U.S. families and debt. And hopefully everyone has a cup of coffee or a cup of tea or something to enjoy their morning with. I've certainly been enjoying coffee lately. Hopefully everyone's got something, though. But another scary story, a potentially very detrimental story for the economy, is that amid rising prices, American families fall deeper in debt. And the number of debt, the amount of debt that each family has on average is now, it's a pretty scary number. Because it includes mortgages and whatnot. So from credit cards to car loans, the average family now owes $155,000. And, you know, that's more money than most people ever have at one point in their lives, you know, in cash and whatnot. You know, unless you're investing in the stock market, then or in cryptos or whatever it is, then you probably don't have this much cash on hand at any point in your entire life. So it's scary to see that this is the average amount that the average family owes in the United States. Now, obviously, once again, this includes mortgages. So it's not all in all the worst situation, right? Because those mortgages are backed by houses, right? You take out a mortgage on a house and the house acts as collateral. So it's not like this is just debt that people are taking out willy-nilly on a credit card and just on goodwill. There really are assets to back up a decent amount of this debt, right? This includes car loans as well. So once again, the cars are backing those loans somewhat. You know, that there's some type of collateral to take if people end up defaulting on this debt. So it does sound a bit scarier than it really is, but still, $155,000 is quite a bit of debt. And that really isn't a good thing to see as prices are rising, right? As prices are rising, families are likely to need to take out more debt, because if you look at this chart that we have pulled up right here, inflation is catching up to incomes in the United States. So this is tracking since 2011. Typically, incomes have been rising more than inflation, which is a good thing. You want families to be earning more money and being able to buy more things because they're earning more money. And unfortunately, you know, although families have been improving their incomes, they've been earning more money, except for over the past couple of years. It looks like incomes have been falling over the past couple of years. Things are starting to cost more as well. So, you know, if this black line tracking inflation was just spot on with this blue line, if it just completely matched the blue line, which tracks incomes, then we wouldn't actually see any increased buying power, right? We would see increased dollars in people's bank accounts because they'd be earning more, but we'd also see the exact same increase in prices. And we're starting to get to a point where this black line is starting to get very close to this blue line. So where inflation is starting to get very close to where people have increased their incomes. So it is a somewhat scary thing to see that people's buying power is being reduced, especially over the course of 2020 to 2021. I mean, that is a sharp uptick in inflation compared to what we've seen over the past decade or so. So it is somewhat worrying to see, and potentially we'll be seeing much worse inflation in 2021 to 2022, and in 2022 and beyond, we could be seeing even worse inflation. I think that's what the Fed has finally realized, and what they've admitted to people at last. They've said that inflation is likely not transitory, and that they have to retire that word, and now they're being a little bit more hawkish. So we'll see what Jerome Powell says, but we do have his meeting at 10 o'clock today. So in addition, since we're talking about U.S. families' debts of $155,000 on average, scary stuff, I did want to pull up the U.S. national debt just here real quick, just because we typically look at this from time to time. It's nice to see it below 30 trillion, but we're probably not going to see it below 30 trillion for long. You can see it's climbing relatively quickly, but currently it sits at 29 trillion, 709 billion, 294 million. So still a relatively high national debt. Nothing that we have to worry about right now, but if that ever, really it does seem like the kind of thing that we should worry about, but inflation or interest rates are so low that we're probably not going to be suffering from it too much at the moment. Obviously, we're not suffering from it too much at the moment, but if we do have to raise interest rates, that could really be bad for quite a few people, especially considering, the average family is $155,000 in debt. Even a 1% interest rate on that is still $1,500. So it is fairly significant. Fairly scary stuff. What families could be paying. 1%. Already, if you have a mortgage, it's probably closer to 2 or 3% if you have a fixed rate. So if interest rates continue going up, granted, people who have fixed rates don't have to worry about it, but if you have a variable rate, it could get pretty nasty over the next couple of years with all of that debt on your hands. So that is something to think about, something to potentially consider positioning yourself for if you do have a mortgage that's not a fixed rate. It might not be the worst idea. Obviously, it's not financial advice or anything like that to tell you to get a fixed rate. Typically, you do have to pay a slightly higher interest rate with a fixed rate, at least currently at the moment. But over time, if interest rates do go up a bit, it could be a good decision. So we'll see what happens with it. But I did want to show you guys, for anyone interested in Sundial, we'll pull up Sundial stock right here. We'll pull it up. So we've got Sundial stock, and it hasn't done too much in the after hours or pre-market, but I did just want to briefly show you guys what's been going on short interest-wise. So we've had a small increase today of 0.79%, bringing us up to 269 million shares short. 13.13% of the free float is short. But you can see that on this chart right here, we're still relatively low compared to where we have been for the past couple of months. So Sundial still, I believe, is at an all-time low short interest since August. So August was the last time that we were this low. Obviously, the past week we were lower, but understandably, a couple more shorts came into Sundial around the confusion of that last-minute change to the Alcana deal. Some shorts potentially were thinking last minute when Sundial was changing the terms of the deal that maybe the deal wouldn't go through. It ended up going through. So all in all, good stuff. I'm excited to see that Sundial has acquired Alcana, has acquired Nova Cannabis. I'm sure that those will provide some cost synergies for them, especially Nova Cannabis, right? Since that is a cannabis company. That'll definitely be providing some cost synergies for them, right? They'll probably be able to put some of their products in Nova's stores, maybe do some cross-branding. Good stuff for both Nova and Sundial, right? Nova will certainly benefit from Sundial's balance sheet, and Sundial will benefit from having additional stores in their portfolio. And Alcana, that one stands on its own, right? That's Canada's largest private liquor retailer. So all in all, good stuff. I'm happy to see it. Sundial, we'll see if we can get out of this stagnation that we've seen over the past couple of weeks. We have actually slightly been uptrending, but as long as we don't get back down to 53 cents, it's looking pretty good to me, right? The fact that we've stagnated instead of what we've done in the past where we've pretty much just always been downtrending, we've actually finally ended that and started stagnating with Sundial. Hopefully we'll start moving up relatively soon. That would be nice to see, but you never know. And Oh, and Mark says Sundial can get a government employee fired for investing in it until it's federally legal, unfortunately. Wow. I was unaware of that. So apparently, you can't, if you're a federal employee, you can't buy Sundial stock. Wow. Wow, wow, wow. Let me see if I can find an article on that. I wonder if anyone has been fired for it. I'm glad I'm not a federal employee. Okay. Wow. So look at this. Look at this. Look at this. So investing in cannabis companies can threaten federal employees' security clearances. Elon Musk's clearance was reportedly under review after he smoked marijuana on the Joe Rogan Experience, actually. But even owning shares in marijuana-related companies can cause problems. That's interesting. So, okay, so Elon smoked on Joe Rogan's podcast, and so far, he's the only person whose government security clearance is threatened by a cannabis connection. Oh, no, he's far from the only person whose government security clearance is threatened by a cannabis connection. Okay, so federal employees and contractors who simply own stock in cannabis-related companies could have problems maintaining the security clearance required to do their jobs, experts told MarketWatch. Wow. In one case, a Department of Defense employee who listed his cannabis-related investments on a financial disclosure form during an annual security clearance checkup was told to get rid of the shares. Wow. Wow. They basically wrote him a letter saying you're violating the public trust by owning stock in this cannabis company. They gave him 30 days to fix the problem or they'll pull the clearance. The employee sold the shares and kept the clearance. All right. So that's interesting. Wow. Looks like the federal government is not kind to cannabis stock owners, it seems. Hopefully that will change over the course of this year, right? I mean, I'm hoping that we end up legalizing cannabis in 2022. It seems like that's the direction everything is heading in. A ton of states are legalizing it themselves or putting it on the ballot in front of voters so that voters can actually legalize it directly or at least decriminalize it in some cities like Austin. And there are bills to federally legalize it that have been proposed by Republicans at this point. So it seems incredibly likely that we'll see cannabis legalization sometime relatively soon. Obviously, the government is very slow with pretty much everything it does. So there could be some lag time there. But, I think it would be a great move for any politician who wants to garner some support before the November elections to support legalization. I think that's a no-brainer on their part, right? Pretty much everyone. I mean, we can pull up a poll of how many people support cannabis legalization. Let's pull up a poll. So let's pull something up. All right. Look at this. Here we go. So Americans, and this is from April of 2021. So Americans overwhelmingly say cannabis should be legal for recreational or medical use. So about 60% of people say cannabis should be legal for medical and recreational use. 31% say for medical use only. 8% say it should not be legal at all and to any extent. And 1% refused to answer the question. So it looks like, overwhelmingly, if you want 60% of the people to be more likely to vote for you, then you should probably support legalization if you're a politician. But also, even if you just support medical legalization, 31%, the federal government's stance currently is that it's just outright illegal, regardless of whether it's being used for medical purposes or recreational purposes. So really, any form of legalization would be better than what they've got now, and that would garner the support of at least 91% of the people, at least that were in this poll. Let's see if we can figure out who exactly was in this poll. Let's see. So, okay, as a breakdown. So let's see if there's a total number of people in this poll. Let's see if we can find it somewhere. Yeah, I don't know if it says exactly without really pining through this thing. how many people were in this poll. I'm going to assume it's a fairly decent one. It seems like they have a breakdown of a lot of different demographics. So, I mean, to do that, you'd have to have quite a few people in the poll to get percentage points this fine on so many different demographics. So it seems like there are probably quite a few people polled in this, and it seems fairly legitimate. Pew Research Center, so it's probably pretty good. But yeah, overall, people are in overwhelming support of cannabis legalization. So we'll see what happens this year. Obviously, it's been that way for a bit. But we've got those midterm elections coming up, and I will say Biden has not been the most friendly towards cannabis legalization. Let's try to pull something on that up. So, let's see. Here we go. Here's something. So, this is Jen Psaki. She says Biden is unmoved on cannabis legalization despite Schumer legalization. So, Senate Majority Leader Chuck Schumer called cannabis legalization one of the high priorities for Democrats. So this story is from when? From July 14th. And President Joe Biden still opposes cannabis legalization. White House Press Secretary Jen Psaki said Wednesday, putting him at odds with Democratic leadership on Capitol Hill. So honestly, this is probably going to be the final hurdle that people have to cross, right? The final hurdle will have to be getting Biden to actually sign whatever bill is proposed in the House and approved in the Senate. If we get something like that this year, Biden will probably be the final hurdle. What we have to worry about the most regarding actual legalization in the U.S. We'll probably have to see Biden turn a leaf on this. I don't know if he will. It could be tough. I don't think he's in the biggest opposition to it, right? He is a Democrat, and Democrats have traditionally wanted to legalize cannabis. However, Biden, he's old. He's from a different time. A lot of people from that time do not support cannabis legalization. So we'll see. We'll see what happens with it. And Silver says Biden will when states do first. Yeah, I mean, that's definitely something, right? There are a lot of states that are legalizing it. Hopefully Biden will follow in tow, especially if the rest of his party is doing it. And if his party needs some additional votes, it would be relatively unpopular. I mean, especially considering the fact that, if he plans to run for re-election next year, or not next year, in 2 years from now, then, it would be fairly unpopular to veto cannabis legalization. I think that would destroy his chances, especially among Democrats. I mean, Democrats have been pushing for this for a long time, and if there was finally a federal legalization bill on the president's desk and he vetoed it, that would be insane. So I don't think it'll come to that, but we'll see. Hopefully it won't. So let's see. We've got 6 minutes until the market open. Not too much more time. It looks like Sundial, unfortunately, over the past bit, has been dipping. So we'll see what happens at the market open. We're around 58 cents. So hopefully we can get back above 60. It was a tough day for Sundial yesterday. We ended up dipping as the market opened. We ended up having some volatility and then dipping down. Hopefully we won't get to the lows of yesterday, 57.5 it looks like. We got close in the pre-market, but hopefully we won't get there. Again, it looks like there was some significant volume taking us down very briefly. But a lot of it could depend on the overall market, right? If the S&P is dipping, then that could take down, a lot of these smaller stocks as well. So DWAC, I will say, ended up doing pretty good yesterday on some high volume, right? High volume came into DWAC. It came into a lot of the Trump-related stocks. And DWAC ended up pumping up above 55, hitting $60 at one point before taking a little bit of a breather, moving down. Now it's using 55 as support, it looks like. So we'll see what happens with DWAC. But this wasn't just DWAC. I think PHUN also moved up. CFVI also moved up now. Now CFVI is fairly closely tied to DWAC. So we've got a lot of good movements in a lot of these Trump-related stocks. So hopefully they can continue moving up, although we'll see what happens with them, right? They have done this kind of thing before to us. It seems like $60 has acted as a resistance for us twice around here. So we'll see what happens with DWAC. The more times that we hit up $60, the more likely we are to break through it eventually. So if we can just do that a couple more times, maybe the next time we hit it, we'll actually break through. Then I think what's the next resistance, I believe, is 70, potentially. let's pull out a better chart. 180 days. Yeah, so let's see. $70 was the last time that we saw a significant resistance on the upside. So yeah, let's see what we can do at 60. If we can break through 60, then 70 is our next target. And after that, there's not too much resistance up until probably $100. So look at that. 100 is probably just going to act as a strong psychological level for DWAC. $100 when you get into the triple digits. That's when it could get tough. And obviously, you know, a gain from 55 to 100 would be great regardless. People would be very happy to see that. From 55 to 100, I mean, you're almost doubling your money. So nothing to complain about, even if it does see some resistance at $100. You know, I would expect to see some. But it really depends on the news, right? If some really great news is coming out, then who knows how high it could go. Especially if we get some really big buyers stepping in, that could be good. We've already had you know, the pipe investors come in, so maybe some of the bigger buyers have already gotten the shares that they want, but we'll see. I mean, on February 21st, True Social should be coming out, so we'll see what happens with it. It should be good news for them from that point onwards. So that's my expectation, at least. Now, I will pull up. Obviously, a lot of people are anticipating this Fed meeting, right? The SPY on StockTwits is actually outranking AMC, which typically doesn't happen. Typically, AMC is above SPY on the most active stock watch. But SPY today, more people are probably talking about it because we do have that Powell testimony today at 10. So we are expecting Powell to speak at 10 today. U.S. Fed Chair Powell testifies right here on January 11th at 10. So we're expecting that, and hopefully he won't be too hawkish. But, you know, the past couple of meetings, unfortunately, he hasn't done great for the markets. He has kind of put a damper on things. You know, it used to be great during COVID. Every time Powell would come out and talk, he would just say better and better stuff about the markets and how much they needed to move up and how the Fed was going to support them no matter what. And it was great stuff. I mean, every time he talked, it was like the markets would move up big on it. Now, lately, you know, the markets have not been doing great every time he's spoken because he has been a bit more hawkish. It's been somewhat negative for the markets. So we'll see what happens. I mean, the S&P did rebound in a decent way yesterday. If you look at the 30-day chart, we did rebound in a fairly significant way. But we are sitting pretty much where we were at yesterday's after hours, or 2 days ago. So we're not really that much into the recovery, right? It's still very possible that we could move down today, especially with Powell talking. That's a distinct possibility. We're not necessarily through with this downturn. It's only gone down. Let's see what the percentage is from the highs, from the all-time highs. We are currently only down 3%, and at the pit of yesterday, we weren't even down 5% from the all-time highs of the S&P. So there's certainly more that we could move to the downside. And let's check the QQQ just to see what that one's at over the past couple of days. So from the QQQ's all-time highs, which we have not even reached too recently, right? That was a couple of weeks ago. From the QQQ's all-time highs, we've got to pull out a bigger chart. So there we go. It looks like from the QQQ's all-time highs of $408, we are down. We need to zoom this chart in a little bit. We are currently down about 7%. And at the lows of yesterday, we were down almost 10%. So it is definitely hitting tech stocks a little bit worse since the most recent downturn, though, right? The one that's happened over the past couple of days, from the highs right before we started moving down, we're down about 6%, and at the pit of yesterday, down about 8%. So all in all, tech stocks are definitely getting hurt a little bit more than the normal stocks, right? Than the brick and mortar, than the retail. But you know, we'll see what happens with them. I'm looking forward to seeing that stock market map whenever it updates, right? I wish it would update a little bit sooner than it does, but here's the S&P map. And yesterday we definitely saw a bunch of red in the big tech stocks. Obviously, a lot of the market was red, but the big tech stocks especially so. Towards the end of the day, they were actually fairly green. So it was a big rebound that they had yesterday. Not too massive of a rebound from where they closed the day prior, but from the lows, they were actually up, I think, 2.7%, if I'm not mistaken. So from the lows of yesterday to where they closed, yeah, 2.99%, it looks like. Almost very close to 3%. They gained from the lows to the close of yesterday. So if anyone was buying that dip, congratulations, you made a good trade on that. And it looks like the market opened about a minute ago. So let's pull up Sundial. I missed it. Let's pull up Sundial. It looks like Sundial's seeing some green. I'm excited to see it. The market's moving down, though. And DWAC is moving down just a touch. And AMC is also moving down. So it's looking like it's looking like for the most part, actually, everything that we're watching except DWAC at the moment is red from the close. DWAC is the only green that we've got on the charts today. And let's see, what else is green? We've got Rumble is green along with DWAC. All right. Silver and gold are slightly green. Lucid is green. MindMed is green. And MJNA is unchanged. So pretty much everything red in preparation for Powell to speak. That's good. He might not be as hard on the markets if he sees them falling, honestly. I mean, I think sometimes, some of the big players, some of the hedge funds, potentially, before Powell speaks or after Powell says something kind of hawkish, might almost be trying to punish Powell, right? By selling off a lot of stocks. Obviously, Powell does not want stocks to sell off. It's his job to keep the markets moving in a decent direction. I don't think there's any reason why he would want stocks to sell off, even if things got frothy. I don't think he ever wants to see a market sell off, right? He's kind of there to keep everything operating smoothly, and market sell-offs tend to not be very good for anyone. So, maybe there are some shorts that benefit when the market sells off, but it tends to not be very good for most people, and it's really not his job to crash the markets. It's his job to keep the economy running decently. But he doesn't need to crash the markets to do it. So sometimes I feel like hedge funds might be punishing Powell a little bit, just kind of putting the markets in a little bit of a tenuous situation, trying to get him to be a little bit less hawkish, a little bit more dovish. So we'll see if that ends up happening. It looks like Sundial's moving up. It's green now. AMC is on the rise. So AMC is only down 0.35%. DWAC actually turned red today. And the S&P, it looks like, is slowly trending downwards. So if it continues doing what it did yesterday, where it just kind of dips slowly but surely throughout the first couple of hours, then we could see a bit of red. And hopefully it catches itself like it did yesterday. But who's to say? With Powell talking at 10, it could be bad. People could be expecting something relatively hawkish. I think that's the expectation in a lot of people's minds. They're not thinking he's going to say anything good about the markets. But we'll see. It is a relatively red day, unfortunately. So on Reddit, we've got not too much crazy stuff, right? We've got the regulars. GameStop is the number one today. For some reason, GameStop has been getting a lot of attention over the past couple of days, with almost 1,000 mentions and over 10,000 upvotes. GameStop has certainly been a popular one, with the S&P close in tow, potentially as people are expecting Powell to talk. A lot of people have been mentioning the S&P over the past 24 hours. There's been a 144% increase. And Tesla, of course, Tesla actually had a crazy day yesterday, which we'll pull up on the chart right here. We'll cover up Sundial for a second. But Tesla had an insane day yesterday. From the lows that it hit, it rose almost $100 in price. It was absolutely insane. Look at this. From $980 to $1,079. It rose almost $100 in a day. It's crazy to see Tesla's market cap change that much, right? It's a very large market cap stock at the moment. I think it's over $1 trillion market cap. It's $1.05 trillion or something like that, I think. So very large, but that's about a 10% increase in the price over the course of less than 24 hours for Tesla. So it's insane to see how volatile Tesla is with such a large market cap. Sometimes you see it with these tech stocks, but Tesla seems to be especially volatile. Tesla is definitely probably a favorite of a lot of these whales who can just pour money into Tesla and take massive trades on it. Anyone who has billions of dollars and wants to trade is probably keeping an eye on Tesla, because they can just disappear in the Tesla volume. I mean, each share is 1,000. So let's see on the opening bell, how much money was that? 371 times 1,000, so $371 million, it looks like, was traded on the first minute of the day in Tesla stock. Look at that. Crazy stuff. Crazy stuff. So we've been ignoring the comment section for a bit, but let's see. We've got some comments coming in. That doesn't look like anything too urgent. No. Just looks like conversation among people. So nothing too urgent. But now we're starting to see some green. So a lot of stocks have actually very quickly changed their tune. We've got a couple flecks of green in the market. So MJNA turned green. MNMD, MindMed, was already green. PROG turned a little green. Smile Direct Club, which is a stock that I've been keeping an eye on and potentially want to be entering sometime soon, that's also green on the day. So it was below $2 yesterday. And that, if I had noticed it when it was below 2, I might have considered buying some. But it really does have the potential to turn around in a big way. I mean, it's just been crushed over the past year. I think that Smile Direct Club at these all-time lows might make sense to get in on. It's for a couple of reasons. One, it has a decent underlying business model, right? It's not nothing. Obviously, they're losing money, but let's pull up their short interest. It's potentially, I think, a short squeeze play that a lot of people might be wanting to get in on. Okay, let's see. Right here. Let's see, where is it? 31% of the free float is short on Smile Direct Club. So a decent number of shares short, 34.35 million. And overall, I think a lot of these small market cap stocks have just been pushed down a little bit too much. Whew, excuse me. I'm glad I have that mute button now, so you guys don't have to hear me sneeze or cough or whatnot. But Smile Direct Club, yeah, definitely one that I'm looking into. Getting very, very cheap. It's been making new lows pretty much every day, just moving down over the past while. And, especially just the past year. Look at this. It was up at $16 during January of 2021. Now it's down almost below $2. So I'm going to be looking at it more closely. If it does drop below 2, I might enter into it just as more of a long-term potential squeeze play. If things start going right for it, I could see, this one could turn around at any point and double back to 4. I mean, that would be no problem for it. But we'll keep an eye on it. Keep it on the back burner. We'll move back to DWAC. But Smile Direct Club is one that I'm interested in. So we'll see what happens. People were talking about that one in the past. I think there were a lot of bots talking about it potentially, saying that it would be the next really big short squeeze play. They said GameStop was the father. They would always be the same comment, pretty much, saying GME was the father of all short squeezes. AMC was the mother of all short squeezes, and SDC will be the son of all short squeezes. So that's what I always used to see on SDC stock. It seemed like a potentially promising play. I never entered it, but now that it's so cheap, it's looking like just a better and better deal. And it looks like the markets are continuing to fall as well. So potentially, if that could get into SDC stock, I might consider entering if we get below $2. But we'll see what happens. There's a lot of potentially promising plays out there. Tesla, which I love, seems to be doing not crazy, nothing crazy over the past bit. In fact, there has been a lot of volatility, but I'm surprised. I'm surprised and impressed that it has not fallen more with this big tech stock sell-off, especially considering the fact that Elon Musk sold 10% of his shares. That the float of Tesla was able to increase by that much, and that its price is still relatively close to all-time highs. I mean, from the all-time highs, we're only down, let's see how much. About 15% from the all-time highs of Tesla stock, And yesterday alone, we saw Tesla rise 10% in price. So Tesla definitely has a lot of supporters for it. I think that if there is a stock that could do well in a bear market, it would be Tesla. But we'll see what happens with it. It's definitely trading at a very high PE. We'll pull that up just for those of you who haven't seen it before. Tesla is definitely trading at a very high PE, as do a lot of tech stocks. Tesla especially, though. Obviously, it's a bit newer of a company than Microsoft and whatnot. But let's pull up. Okay, so here we go. So Tesla at a $1.05 trillion market cap right here, with a PE ratio of 341. So that's a price to earnings. That's basically how much you multiply the earnings by to get the price. And, that is fairly high. I'll pull up some other stocks that we can compare to Tesla, some other big tech names. But Tesla we've got at 341. And then we'll pull up Microsoft. Microsoft trades at a PE of 34. So Tesla's is almost 10 times that. Apple trades at a PE of 30. Amazon trades at a PE of 63. So it looks like a lot of people believe in Amazon. That's higher than I would have thought. So that makes Tesla look almost a little bit more reasonable. Let's pull up Nvidia. Nvidia might be a little bit. Wow, 83 for Nvidia. So people really like Nvidia. I mean, people obviously love Tesla, and obviously, there are a lot of companies that trade at negative PEs, or not even negative PEs. They trade at a PE of a non-existent PE because they have no earnings and they still trade at a high valuation. In fact, let's see if we can find one. Maybe I think maybe Hood stock could be one. I think Hood. Yeah, look at that. So no PE on Hood because Robinhood does not have any earnings. So it's one of the ones. And Tesla, if I had to choose one of the two, I would probably bet bigger on Tesla than Robinhood. I mean, Robinhood, it's a decent business model. It definitely has a lot of users and whatnot, and it's definitely growing rapidly. It's very easy to use and has a lot of good things going for it. But Tesla, I think, is probably going to be a bit of a bigger player in the future. And look at this, Sundial. We missed it, but Sundial was having some movements a couple of minutes ago. Some not crazy volatility, but a decent amount of volatility, almost hitting up 60 cents. We got pretty darn close. We got pretty close. We'll see what we can do on Sundial. Tilray had a very disappointing pre-market. It looks like we've come back a little bit during the actual trading day, but we have slowly been trending up, actually, making slightly higher highs throughout the day. So that could be good for Tilray, but we're down about 5% on the day after their big rally yesterday. We haven't completely erased the gains that we saw, but we've gotten rid of a decent amount of them, unfortunately. Let's see. So we closed the day prior, and from where we closed the day prior, it looks like we're currently up about 8%. Not nearly the 21% that we were at the peak of yesterday, but still, 8%'s nothing to sneeze at. We're still doing decently with Tilray. In fact, I think we can probably get up above $7 today. We've hit that up a couple of times. It looks like that's what we're struggling with right now. I think $7 is still relatively cheap for Tilray. Probably very cheap for Tilray. We've been up to 67 at one point at the peak of the hype. So if you're just in Tilray for a trade, then it could make some sense. And Zach Taylor, good morning, fellow Robaholics. That's good. Good morning, Zach, man. It looks like DWAC. I mean, it looks like you made a good call getting out of those metals and going into DWAC. Although metals are green today. Metals, gold is up a little bit. It's slowly been trending up, but nothing crazy. We haven't gotten above the highs of the past 30 days yet, so we'll see what happens with it. Honestly, I'm content for gold and silver to get a bit cheaper so that I can get back in to those positions that I tax loss harvested towards the end of the year. So we'll see what happens with GLD and SLV. Hopefully, my hope is that they'll fall a bit, but we'll see what happens with them. Now, I did want to turn to cryptos for just a couple of minutes and take a peek at what's gone on. So nothing crazy in cryptos, but we have actually seen them start to bounce back a little bit over the past 24 hours. Bitcoin is up to $41,700, up 2.6%. Ethereum's up 3% to $3,100. So it is a fairly scary fall that we've seen in these cryptos. You know, anyone who's super crypto heavy is probably not the biggest fan of it because we are continuing this downtrend, right? And there's no telling how long the downtrend could continue. You know, obviously there's some support probably at every $10,000 increment, but we'll see. I mean, the lowest we got during the pit was right around $30,000. So, you know, if we break through 40, then we're on to, you know, potentially the last support that we've got before we go maybe pretty darn low, maybe to 20,000. The last thing we've got is 30 after that, if we do break through 40. It looks like currently we're seeing a bit of support at 40, right? We've bounced off of it a couple of times, bounced off of close to it at least. Now we're above it at 41.5, so we did actually just drop a little bit, couple $100 in a minute or so, unfortunately. But that's just Bitcoin. Ethereum, you know, is following along. It is moving up over the past day. It's looking like it's done pretty good. It's bounced off of 3,000 in a decent way. Ethereum 2.0 should be benefiting it, supposedly, right? That's what a lot of people are talking about, at least. So we'll see if that actually happens, if they end up getting an appreciation in price over the next couple of months due to Ethereum 2.0. Maybe once some people come out who really understand what it's all about and explain it to people, they can maybe show why. They can explain why Ethereum 2.0 is going to be really important. You know, I watched a couple of videos on it, and it all seemed like a bunch of mumbo jumbo to me. I understood some of it, but it didn't quite explain why the price was meant to go up, why it would mean the price should appreciate. But, you know, we'll see what happens with it. Ethereum, if I had to bet on one, Ethereum or Bitcoin, I'd bet on Ethereum. But a lot of the cryptos, the cryptos all pretty much tend to move in the same direction, right? Dogecoin's up 5%, Shiba Inu's up 5%. Pretty much everything is up and green except for the stable coins. So all in all, cryptos are looking pretty good today. Oasis Network, ticker symbol ROSE, is up 26% to 40 cents per coin. So this might be a new up and comer. Maybe we'll see a little pump on it. Who knows? Now I did want to pull up the S&P map. We finally got the S&P map. Here we go. So the S&P map finally updated. So it looks like we're seeing relative green in, it's a mixed bag. We're seeing a decent amount of green, but also a decent amount of red. And most of the red, at least some of the more notable red names, are the bigger ones. Tesla's slightly red, Amazon slightly red, Google, NVIDIA, Adobe, Oracle, Microsoft, Apple, Visa, JP Morgan, Bank of America, Berkshire Hathaway. A decent amount is red today. Netflix is red. Facebook's a little green. And there are some green things such as Pfizer. And, you know, there is an interesting story that I wanted to pull up on Pfizer. Let's see if we can find it. Let's see if we can find that story, if it's still around. It sounded very good for Pfizer. So let's see, where is it? Where is it? Oh, we had it a second ago. I hope they didn't hide it away. Let's see if maybe we have to scroll down a little bit. Let's see. I'll search for it. Okay, here we go. So good news for Pfizer came out from Pfizer today. So look at this. This is really good news for Pfizer stock. The Pfizer CEO says 2 vaccine doses aren't enough for Omicron. So it looks like Pfizer's going to need to, if people want, Pfizer's going to need to put out some more vaccine doses. They're going to need to sell some more of those doses and get them going. So really good news for Pfizer stock. Pfizer is green on the day. We'll pull up Pfizer. It looks like, they're benefiting from this news, from the news the CEO just put out. It looks like people are buying up some Pfizer stock on that news, that there's going to need to be some more dosing for Omicron. So Pfizer is definitely benefiting from this. So the quote, the 2 doses, they're not enough for Omicron. The 3rd dose of the current vaccine is providing quite good protection against deaths and decent protection against hospitalizations. So look at that. And another quote from, I think this is the CEO of Pfizer. We have seen with the 2nd dose very clearly that the first thing that we lost was the protection against infections. But then 2 months later, what used to be very strong in hospitalization also went down, and I think this is what everybody's worried about. So look at that. Look at that. According to UK data, 2 doses of Pfizer's or Moderna's vaccines are only about 10% effective at preventing infection from Omicron 20 weeks after the 2nd dose. Wow. And look at this. A booster dose, on the other hand, is up to 75% effective at preventing symptomatic infection. Wow. So well, look at this. It's interesting how statistics are potentially bent, right? I don't know if they're purposefully doing this, but they said 2 doses are only about 10% effective at preventing infection, but 3 doses are up to 75% effective at preventing symptomatic infection. So they do differentiate between infection and symptomatic infection when talking about the booster dose. I mean, who knows what the just infection rank would be with the booster dose. It might be much lower than 75%, but preventing symptomatic infection. Interesting way of doing it. So, yeah, we'll see. We'll see if that really does end up benefiting Pfizer. I mean, obviously, it's benefiting their stock price currently. The stock price is moving up 1.5% just about on the day. Maybe they'll end up selling a decent number of additional doses. We'll see. We'll see what happens with them, though. So Pfizer's looking like a good one at the moment. Sundial is green on the day. It looks like we're getting very close. We're struggling to make new highs of the day, but I think we can do it. We're not that far off. We just need another little pump up, and then we'll be there. We'll be up to 60 cents, which is really where I would like to see Sundial getting to and moving and staying above. I think 60 cents at this point would make a lot of sense if we could get there and just stay there, because in the 50s it seems kind of ridiculously cheap to be getting Sundial stock. But we'll see what happens. Obviously, we haven't been there for that long. It's been less than a month, or no, it's been about a month that we've been below 50 cents. So we'll see if we can get back above 60. That would be the hope, right? That we'd start moving up, that some more shorts would realize what the writing on the wall says and start covering their positions. That would be the hope with Sundial, right? That a lot of the shorts are going to continually be exiting. Obviously, we want to get above $1 pretty darn soon. We're not that far off. We're about 40 cents away. I think we can do it. Hopefully, they'll start doing a share buyback or something. So Rick says, yeah, that's what we're talking about. The delisting of Sundial, I believe February 7th might be the day that we're at risk of delisting. Obviously, they could apply for an extension, but my hope is that they'll just get us above $1 before then. It definitely could happen, especially, I mean, hopefully, the CEO has some kind of plan with this Alcana acquisition, with the share buybacks and whatnot. Hopefully, we're going to see the price start to move up fairly soon. That would be the hope. It's very possible that he's going to wait until the acquisition ends up being complete, until there are those additional Sundial shares that have been handed out in exchange for Alcana shares, and that in order to garner some support from the Alcana shareholders who, most of them want this to go through. Obviously, 90% of the people at Alcana voted yes to the transaction, right? They want this Sundial merger to go through. So obviously, a lot of them are going to be happy holding Sundial stock. But it is interesting to think that potentially the CEO of Sundial will be waiting until just around maybe a day or a couple days after that transaction really goes through and the Sundial shares are out there in the hands of those Alcana investors. Maybe he'll wait until then, do the buyback, and they'll be encouraged to see, oh, look, this new stock that we've got, SNDL, is rising a couple percent every day. since I've been holding it. I like this stock. Let me buy some more of it. So it's very possible that that's what the plan is with Sundial. That would be the hope. And in about 4 minutes, we've actually got Jerome Powell talking. Now, I won't pull it up live. I don't like the copyright risk of pulling up stuff live. But, like I said, 10 is probably when we're going to be ending this thing. Just to give my throat another day. Might have to give it tomorrow to recover also. But, unfortunately, there has just been a slight lingering of throat annoyance. So it's overall, I feel perfectly fine other than that. It's just the throat. So M says Alcana shareholders will dump. Maybe some will, right? Because obviously not everybody voted one way or the other. There are obviously going to be some shareholders, like what we saw with NAKD stock, who were just confused about the whole thing. They don't know what's going on. They don't know what Sundial is or what happened to their Alcana shares. They'll be confused about that. And some will certainly sell, right? Some will sell, but some might decide to buy more. So we'll see what happens. I think that if they look at this chart, they'll and know, especially if they're in Canada, know about the catalysts that we've got going forward. A lot might decide to buy more, especially with that cash bonus, right? Some of the Alcana shareholders, or all of the Alcana shareholders, will be getting some cash in the deal as well. They might decide to pour it back into Sundial stock, which essentially would be a buyback in a different form, right? They're handing out cash to investors, and then if the investors decide to buy more, that's essentially the same thing as a buyback. Not exactly the same thing, but something similar to it. And overall, it's looking like a lot of these stocks that we've been watching are turning relatively green. So I'm happy to see it. Now there's only a couple of flecks of red in PHUN, CEI, Tesla, SBEA, so Black Rifle Coffee Company, OCGN, NAKD is still red, it looks like, unfortunately. That one I'm not too worried about over the long term, but it is disheartening to see it just be red day after day. And Tilray's a little red, but it looks like it's come back in a somewhat decent way over the past couple minutes. Look at that. So it is climbing slowly but surely. So look at that. Good stuff to see with Tilray. I'm happy to see it. And DWAC is looking pretty green also. So look at that. We bounced off of 55 early in the morning, and we've also got it on the chart down here for some reason. And now it's moving up. So I'm happy to see that. AMC is green. It looks like a lot of these more retail stocks like AMC, DWAC, Tilray, it looks like they're all moving up, and the S&P is moving down, potentially being dragged down. Are tech stocks moving down big? Let's see. Let's pull up that market map again. It just looks like a mixed bag right here. It looks like it's not everything. It's not everything moving down, but some of the tech stocks, Google, Microsoft, Apple, Nvidia, Oracle, Tesla, even Netflix. Yeah, a lot of the big tech stocks are moving down. Amazon and Facebook are the only real green ones. AMD also is green. So we're seeing a bit of red today. But all in all, it could be worse. So it definitely could be worse. And we are expecting in just a couple of minutes for Fed Powell to start talking about monetary policy and whatnot. So hopefully we don't see a big turnaround in the S&P. It looks like the VIX has been gaining some value as we're getting closer and closer to this Powell meeting. People are potentially expecting some volatility around it. Now, obviously, it's moving along with the S&P, right? As the S&P goes down, we'll pull up the SPY, we typically see the VIX move up. And the VIX is the volatility index. So the higher the VIX is, the more volatile the markets, the more risky. Typically, the further down they're moving. When the VIX moves up, typically it's because the markets are moving down and there's more potential risk out there. But all in all, we're not that high up on it, right? We haven't actually really started moving up in too big of a way. But we'll see what happens. If Powell really says something hawkish, if he follows Goldman Sachs's prediction and decides to do 4 rate hikes this year instead of 3, that really could put a damper on things. The S&P, it's only down about 0.5% at the moment. It could be down 1 or 2% if Powell really announces that. Right now, it's just a suspicion that Goldman Sachs has, but it has not been confirmed by Powell. Powell said likely 3 rate hikes over the course of 2022, but we'll see what happens with it. Hopefully, it won't be too many more rate hikes. I'm hoping for just the 3. Honestly, I'm hoping for fewer. But he's going to do what he has to do. Inflation is an issue that we've been dealing with. So let's actually pull up the CPI data real quick. Let's just get it on the screen real quick. So the CPI data is actually being released tomorrow. We're expecting it. And in the past, we're forecast to have an increase of 0.5%. So we'll see if that's on par with what we actually get. And that comes out at 8:30 tomorrow. So we will be covering that bright and early at 9 when the stream begins. We'll be looking at the CPI data and seeing how potentially damaging it will be to the economy. It looks like we were on spot on with the forecast last time of 0.5%. But we'll see what happens with the CPI. Hopefully it will be lower, but my expectation is probably higher. I've definitely noticed in person, at least, a lot of price increases. And, I find it hard to believe, honestly, that we've only seen price increases this low thus far, right? On the CPI data, at least. I don't know how they measure it exactly, what prices they're measuring increases in. I mean, I've looked at, some of the specifics, but I almost just don't believe it because I've definitely seen price increases. I don't know where they're getting these numbers, where they're shopping at to measure these price increases, but it's not where I'm shopping. I'm shopping at places that are raising prices a lot more than 0.9% a month, right? Or point, yeah. So we'll see. We'll see what happens with the CPI tomorrow. That'll definitely be interesting to see. And I do want to point out we've got 105 viewers on the stream at the moment, but we only have about 50 likes. So if we could get potentially higher on the like count, that would be much appreciated. Just before the stream ends, that would be very much appreciated. But it is just about time that we end this. Once again, we're ending a little early today. Typically, we go until 10:30. But over the next day or so, we'll just continue ending it just a slight touch early, just to give my throat a little bit of time to heal. It feels pretty good, but I can definitely feel a little tinge in it ever since the past couple of days. So we're going to give it some more time. Don't want to stress it and have it revert into something worse. So hopefully you guys enjoyed. Hopefully we have a somewhat green day and a green time while Powell's talking, right? We don't want to see Powell tank this thing. That's what he's done in the past. Unfortunately, he's been known to tank the market when he's been hawkish, but hopefully he doesn't. So other than that, guys, have a great one. I'll see you tomorrow for the CPI reading. That's really important stuff. So make sure to show up bright and early for that, because we're pretty much going to be talking about it right off the bat. It'll have come out about 30 minutes before the stream starts at 9 tomorrow. So I'll see you then. If you're new to the stream and whatnot, and this is your first time joining, don't forget to subscribe and like the stream. That's much appreciated. But other than that, guys, I'll see you in the next one. Have a great day. Bye.